Here are 7 different ways of how you can make money and invest in the Canadian real estate market in 2022. Real estate investing in Canada has been proven to be a sound investment for many generations. But for many, the question of how you can get into the market is a bit of a tricky one, right? In this video, I will tackle 7 different ways of how you can invest in the Canadian real estate market. But before anything else, let's dive into what real estate investing is all about. Hi, my name is Rain Villaspear and I'm a realtor with eXp Realty. Thank you so much again for tuning in, and for those of you who are currently new or new to my channel, welcome. Feel free to like, comment, and subscribe. That would mean the world to me. I hope that my videos would provide so much value to you in terms of, helping you navigate the world of real estate. So let's get straight into the value. So what is real estate investing in the first place? Real estate investing is when you generate income from lands, buildings, or a combination of both. Now, for a lot of Canadians, real estate investing, when we say real estate investing, we always think about rental properties. And yeah, that is true, but there are also other different ways of how you can participate in the real estate market without having to buy physical properties. And I will dive into that later in the video. So make sure that you stay tuned and watch the video till the end. What are the benefits of real estate investing? First is cash flow. Cash flow is king. I don't know if you heard about it, but that is true. When a real estate investor looks at a property and with the intention of renting it out for generating income, one of the things that they have to look at is if it's going to cash flow. What is cash flow? Cash flow is that predictive passive income stream that pretty much covers your carrying costs, such as your mortgage, condo fees, if you have a condo, property taxes, insurance. And if the rent is higher than your carrying cost, then that means you have a positive cash flow, right? In Toronto particularly, it's very difficult to find positive cash flow properties, mainly because the price point of you acquiring the property is way higher as to what the current rental market is. The second benefit is price appreciation. History has shown that there is that positive upward trend for the past 10-20 years in terms of price appreciation of your home. So let me give you an example. We bought our home in Mississauga, a semi-detached home, for a little bit over than $300,000. Now, fast forward to 2022, if you were to sell that home as is, it's now worth more than $1 million, at least $1 million. So you can see that from $300,000 after just 15 to 17 years, the value of the property already quadrupled. The third benefit of real estate investing is building equity, or mortgage paydown. Every time you pay down your mortgage, a portion of that payment goes to your equity. So the more payments that you make, the more equity you build, versus paying rent, where pretty much nothing of it goes to your equity. The fourth benefit of real estate investing is leverage, and I cannot stress the importance of the power of leverage. So a lot of real estate investors use the BRRRR strategy. A lot of you may have heard the BRRRR strategy. B stands for buy, R first stands for renovate, second R stands for refinance, the fourth R stands for rent, and the fifth R stands for repeat. So that is a real estate investing strategy when a person acquires a rental property under market value, forces the appreciation through renovation, refinances it, takes the equity out, and using that equity to buy another rental property, and the cycle repeats again. And that's why you probably have heard other people who are able to acquire several properties in just a short amount of time. The fifth benefit is tax breaks and tax deductions. When you buy a rental property, a lot of that cost can be expensed. For example, professional legal fees, insurance, mortgage interest, property taxes, and if you are selling your principal residence, you have the capital gains exemption. The number 6 benefit is inflation hedge. Right now in Canada, we are facing a historic 30-year high of 4.8% inflation rate. So as the cost of living goes up, the cost of goods go up, so does real estate. And during inflationary periods, you should also put your cash into real assets, such as real estate. Number 7 is generational wealth. If you have kids and grandkids, you would have that peace of mind knowing that they will be financially secure in the event that you pass on. So those are some of the few key benefits of real estate investing. Now let's talk about the 7 ways of how you can make money in real estate investing. Number 1 is buying your principal residence. I know a lot of you may argue that buying a principal residence is not really a type of investment because it's not cash flowing. However, no matter where you stand on the issue, the house that you live in potentially can increase in price appreciation, and you're also building equity on top of that. Not only that, if you were to sell your principal residence, you are also exempted from the capital gains tax. Number 2 is house hacking. This is probably the most popular and easiest way of how you can generate income using your primary residence. And house hacking pretty much is when you utilize or rent out parts of your home, it can be a bedroom, a basement suite, to other people so that it can help you offset your carrying cost living in your primary residence. It truly is a great way to generate income and have cash flow and grow your net worth. Number 3 is converting your primary residence into a rental property. If house hacking doesn't interest you and you really value your privacy, then converting your primary residence into a rental property might be a better way. There are a few advantages of doing so. Because you already own your principal residence, you don't have the upfront expenses of buying another rental property. Typically when you buy another rental property, you will need at least 20% down payment, and you have to find a suitable home that you can rent out at market rate. And that pretty much is a lot of work. However, if you're planning to convert your principal residence into a rental property, you have to make sure that the market rate will cover your carrying costs, i.e. your mortgage, condo fees if you're living in a condo, insurance, and property taxes. And having said that, number 4 is purchasing a rental property. And, at the same time, living in your primary residence. If you have enough cash available for a down payment and maybe renovating it, then this route might be a better way. The upfront cost might be a little bit higher, but at least you can pick something that is well suited for rental property. And in terms of financing, there are different ways of how you can leverage your primary residence or the equity that you've built in order for you to obtain and acquire that rental property. A lot of homeowners use the Smith maneuver. So what is the Smith maneuver? Smith maneuver is when a homeowner uses the equity built in their home to purchase maybe a rental property, a stock, or a business that generates income, and whatever interest accrued from your HELOC or your home equity line of credit, it can then be expensed at the end of the year. Number 5 is flipping a residential property. If you've watched HGTV, you're probably familiar with the term flipping a home. House flippers invest in real estate by investing and buying under market value homes, renovating it, and selling it at a higher price to retail end user. Some flippers choose to rent it out long term to a tenant, but the goal really is to go in and out as quickly as possible. Now, there are a lot of risks when you flip a home. A lot of people have that preconceived notion that flippers make a lot of money, but the reality is flipping a home comes with a lot of risk and low profit margin. Don't get me wrong, it can be very lucrative, but with the inflation going on and the lack of trades, the main pinch point for flippers are the material cost and finding a dependable and cost-effective general contractor. So what are the things that you need to know when you plan to flip a home? You need a lot of capital or a lot of cash. You can have your plans derailed because of supply issues or labor issues. Carrying costs can balloon if you cannot sell the property as fast as planned. And if the market turns, you're stuck with a property. Number 6 is short-term rentals or Airbnb. And this is probably one of my favorite ways of making money in real estate. Not too long ago, I've started leasing or renting out my primary residence here in downtown Toronto in the heart of St. Lawrence Market. And ever since I listed it on Airbnb, let me tell you, the cash flow is very lucrative. It's very rewarding. So if you're thinking of using Airbnb or short-term rental in real estate investing, some of the things that you should know is that you can list it anytime through Airbnb. You set your price. It is very flexible, and you get paid the day after your guest checks in. Now, it's all not rainbows and butterflies. During the pandemic, a lot of short-term rental operators actually lost money because of the lockdowns. There's no influx of tourists, and tourism is the main blood and life of short-term rentals. So the reward is high, but the risk is also high compared to long-term leasing. Number 7 is buying REITs or REITs. REIT stands for Real Estate Investment Trusts. REITs are pooled investments that let you buy a basket of different real estate stocks without having to physically owned buildings or land. So what are the advantages of buying REITs? It provides good dividend, you are geographically diversified, and you can liquidate it anytime. Not only that, it's also RSP and TFSA eligible. And there you have it, folks. I hope you got a lot of value from watching this video. If you are thinking of getting into real estate investing, or you just want to get your first property, feel free to give me a shout and I can definitely provide the help that you need. Alright, ta-ta, stay warm and stay safe. Bye!